Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. It is Thursday morning. Welcome to today's morning call. So you wake up today, you look over in Asia, you see mainland China, the Shanghai down 6%, but then you look to the Nikkei, it's up 1.4%, the HK is only down small. Then you go to Europe, which is broadly higher. So it seems as if the market is kind of isolating the Shanghai, saying, you know what, these moves are, happen all the time and we're not going to go nuts off it. So I guess at this point it's isolated. Maybe if it gets below 2,700, which is the recent lows, some eyebrows get lifted. But as of right now, that's being isolated there. We've had divergences everywhere recently regardless. Yesterday the futures were down, 15 handles, and you had that big question, what was going to happen that morning? Were we going to break below the prior pivot Friday low, which was right around 1902, and accelerate lower like all the big guys were starting to say that we had to go back down to lows? Or were we going to break below, stay below, and reclaim it, giving you a good pivot to buy or at least to cover your shorts, and then see some kind of reversal? And we did see a decent reversal yesterday, closing near highs. Lots of sectors participated, including high beta tech. And now we'll see whether or not there's enough juice to break above resistance. I'd rather see an inside day today, but we shall see. Either way, let's just start heading to the charts. You go to the chart of the SPX, and we've been talking about this W type, double bottom that we saw right around 1812. From here, it's been pretty methodical. You had a bit of a 3-day powerful move off of that low to show some appetite for stock down there. It was fast and furious before finally, just reaching a peak up here, which was pretty much coordinated to the prior peak. If you look here, this was, this high here was 1947. This high here was 1946. So anyway, you had a decent pullback that gave you some downside follow through, and then you cross your line like this, and this is exactly what we isolated yesterday. We said, would we break and close below this, or reclaim it and still be above the 8 and 21-day moving average? Now, if you go back to here real quick, this was your low from August, and here was your double bottom. Here's when we took back the 8 and 21-day, got a little extended, came in, and then we followed the 8-day all the way up to about 21.25. So even if you missed the first part of this move, okay, once it took out this resistance right here, if you get rid of that tail, it came back, tested it, and you still had another 100 handles or so. So the question is this similar? Can we hold above now your new point of reference, go sideways, then take this out and see some type of move to, see this, 2000 area where all the moving averages are above it. So as of right now, the tactical bull move is still in check, but the intermediate bear, which some people are talking about, is also still in check. You can go to your weekly chart and look at, this weekly chart and see that, everyone is still thinking that structurally, okay, although we did hold this support, that, we could see a move up to where I just showed you, but then roll down and then see new lows. So, that's what you're looking at as a trader. Are you tactically bullish and making cash flow and trading these ranges, short term, or are you looking more bigger picture? And hopefully you trade all those time, horizons. Maybe you're in, a little less cash in your 401k or this or that, or maybe you just put monthly money in every month, and then, you could have trading accounts if you do it professionally where you try and play these ranges. So with that being said, one thing I saw that was constructive yesterday was the IWM. You go to the IWM, that's been very broken, but on the daily, it looks as if it wants to retrace a little bit higher. So if you trade for cash flow, and you're not caught in, what was a breakdown below the 200-day at 117, yesterday we talked about 99. This gave you a really nice red dog reversal right there. Okay, let's just show it closer up. And now the question is, can it take out this spot? So maybe we see an inside day, maybe we don't, but if it starts to take out this 102 with some volume, you have a clean move to 103, so you have about $1 before it hits, that prior peak, and then you also have about $1.50 or more until it hits the 50-day. So if you want to take a snapshot of that, it's holding up pretty well for now. A lot of people think you're getting this like inverse head and shoulders pattern, and we're in the right shoulder for this to break to the upside. And you have a lot of patterns that look like that. A lot of, inverse micro tactical bullish patterns versus the intermediate macro real head and shoulders pattern. So you got to figure out where you want to live. You go to the Qs. The Qs also had a decent engulfing day. Kind of looks like the spiders, where it traded below this pivot, okay, which was your only point of reference you had, short term, which was 161, went as low as 99.77. So if you bought it when it came back above this, about a 90 cents risk, and it went up, what, another $2. So now the question is, kind of take out this resistance area and show some leadership to take it back to the January highs and near the 50-day, which is a little closer to 104. So we shall see. Right now it's still above the 8 and 21 day that are reclaimed. It's doing some decent basing here, so we'll see if there's a little bit more fuel left in that tag. If you want to do the same thing and look at what happened here, in the Qs, here was your higher low. Here's when it reclaimed the 8 and 21 day and then pretty much rode this all the way up until finally the peak. So here it's trying to do it again. And these things take a little time. Let's go to the banks. I'm going to show you JP Morgan instead of, what's it called, the XLF. We talked about how this has been a leading indicator. Didn't love the fact what Jamie Dimon said about being bored to buy a stock. But anyway, we talked about what would happen into this gap yesterday. Well, it came into it, got some guys out, and then created a nice little red dog reversal around this pivot. And this was somewhere around 55. Okay, closed near 56.21. So if you were a buyer of this when it reclaimed, 55-ish area, you did pretty well. Now the question is maybe it rallies to here, which is where the moving averages are curling down because this is still very broken, or not. That'll give us some clues on whether or not the market could have enough power to continue higher. Other clues is from oil. Oil at the 1030 number came out, a bigger drawdown than some thought. There was a quick move in oil that got faded, and then all of a sudden, an hour later, they decided to rally oil, rally the markets, and that's what's been going on here. Just so you know, the money that I used to make pretty consistently between 9:30 and 10, it's not happening as much anymore. For some reason, the move could either be at 10:30, the move that started yesterday was at 11:45. The timing mechanisms intraday are a little different than what I've been used to or what we've seen over the course of the past few years. Maybe it's because of the computers, maybe because it's when the timed buybacks are, et cetera, et cetera. Just know that, you don't try and do things too early because it might wear you out for what you were looking for later. I know a lot of guys were trying to be long between 9:30 and 10:30, and by 11 o'clock they were all battered and bruised, and then 11:45 the move happened that they wanted in the first hour, and they were a little frustrated. So don't let that happen to you. It easily happens to everyone. It happens to me all the time also. You got to stick with it. So now let's go into some of the high beta names that showed some signs of life, because they were two-way trades yesterday. We talked about the upper areas that broke, and some guys made quick money short, and then they got reclaimed, and you could have covered and maybe even got long. As of now, it seems like Amazon is acting, I guess, the best in high beta land. It took out this 541 that we talked about yesterday, then held the 200-day, came back up. Now I guess we have this little flag type pattern, and you'll see whether or not there's enough strength to take this out to see the higher moving average around 576. This has become a range trade ever since this breakout failure here, or if you didn't take it into earnings, but now it's flagging. It's still kind of going up this ascending channel. Tried to break it yesterday, couldn't, and now you'll see if there's any juice left in the tank. Google has been a little bit more lethargic. It did get below that 713, but did not stay below, and some guys may have gotten long when it got reclaimed. Still a boatload of resistance here, so this has been a little harder to trade. Maybe because it doesn't have the buyback that Amazon just announced, or maybe there's not enough shorts to squeeze when it goes up. But either way, this has not been a great intraday type of trader. You go to Netflix. Netflix actually, for the first time, showed a little relative strength yesterday. It was the first to go green. The stock is very broken still. It's still trapped in this descending channel here where it's pretty lethargic. This trend maybe comes up to here. Here is your 200-day. I guess, Amazon was able to reclaim the 200-day, so perhaps this can. All I know is that you did get a bit of a red dog reversal here. Or it held where it had to. So the question is, can there be one more trade here to get to that 97 to 100 area, which would just be a move back to this descending trend line type. So I got long a little of this yesterday. Hopefully it doesn't go, it seems like it's green, red. It doesn't get any continuity, but it'd be nice to see this thing take out, 92.50 with some kind of force and get it moving a little bit better. BABA reversed yesterday, but is down a little bit today with Natesta's earnings. This has been moving a little better since this big gap up here. I know Sperling's been trading it pretty well. There could be an opportunity today. BABA already reported in a different business in the test. It's down. Well, you also have mainland China down 6%, so it might be, it might be out of play today. But either way, if it opens up near yesterday's low and holds it, maybe you get another opportunity there. The test is down like 6%. It's been one of the stronger names. I didn't really dissect the numbers, but if you want to just take a quick look, this 149.50 is big support. Maybe it tries to hold that. If it doesn't, all the moving averages down here are closer to 144. This is also affecting BIDU. BIDU is off a little bit. I think it still has to report. It gave you a small reversal yesterday. I think it was upgraded, but people might be a little scared, ahead of earnings. I think they're tonight, so take a little care there. In mega cap land, Apple, no continuity from one day to the next. I guess at least on Tuesday, it closed weak, gave you some downside follow through yesterday, but then showed some relative strength. Maybe they turned on the buyback machine. It reclaimed the pivot. Still lethargic, still broken, still in the lower range, but hasn't broken yet. It traded below this pivot right here, okay, which was 94.55, and then reclaimed it and went another $1.50. Still, the 21-day now is a little bit lower. I don't know if it's worth your time, to be honest. It's above this, the lows of the year. I guess maybe at some point, I don't know, maybe when it comes, I don't even know. Maybe with the new product, maybe next earnings. At this point, it still doesn't look so great. Every time it looks really good, it fails. And then when it looks bad, it bounces. So, not that easy for traders. Let's take a look at what Microsoft looks like. Microsoft, not doing a hell of a lot. At least it's above the 200-day. Let's see what Cisco's doing. It was a bright spot after earnings. Look at that move. Just so you know how new moves start. Well, when you get a gap up above a prior consolidation, that could start a new move, and it gave you one, and then it reversed yesterday. So Cisco's acting, a bit better. Above the 8-day was broken for a long time. So if you get out of it when it broke the 200-day or this gap down or broke support, you can always get into a situation based on a pro gap. You buy versus the gap and then see if it works out. So, with that said, just a little rule or something to throw out at you. Let's see what Disney's doing. Disney's, put in its low, going sideways a bit after that. Here is the resistance in this channel. Broken below all the moving averages, but, hangs around for a trade, I guess. I saw it red, it went green. So, in those deep red days, it seems like Disney tries to go green. I saw Sperling trade McDonald's. Let's see what McDonald's is doing. McDonald's, nothing so great. To me, this looks like, a breakout failure right here with downside, and it did hold, but nothing special. Let's see what Under Armour looks like. Under Armour, I'm like an old Jewish man. Well, we'll see what happens here. You have, I guess, this little inside wedge, holding higher. Don't know if you could buy strength, but if it takes back the 200-day right around this 83, you could see a move a little bit higher, but really hard to trust. It's been broken, but trying to repair. Stocks do repair. You saw, Target out of nowhere, really have a strong day. Took back the 200-day, closed real strong. Broke above this, you could draw this descending channel here, broke above it here, and actually was one stock that has penetrated through all the moving averages. So this type of situation can happen, so you got to be a little careful when you just think you could short everything when sometimes there's enough power to reclaim it. You look at Walmart. Walmart actually looks somewhat decent too. I was looking at it. Maybe this follows suit. It's been battered and bruised, and it's come in so much, but now it's hovering at the 200-day line, so maybe there's a way to get above it. So if you trade retail, which has been a bit stronger, there's some, this looks a little bit like a inverse head and shoulders pattern, which would probably be good for the S&P also. Left shoulder, or maybe even a little bit of a, what's it called? You want to take a snapshot of that. That's a little cup and handle type pattern where it gets above this. Maybe it can go. Macy's, what are you doing? I love that. Reversing up a little bit. Maybe this tries to continue. I don't know anyone who shops at Macy's anymore, but it's in a gap and maybe it tries to close it. So see if you can get above this for a little bit more upside. And then you have some of the casinos. WYNN was supposed to be like my big focus, my big long in my personal swing account, and the year started wishy-washy. I got away from it. Some guys have been talking about it, that they got back involved, and if they did, congratulations to them. You did have this big gap up. Look at this gap up that kind of reignited the stock. I didn't draw that well right here, and then it took out what I wanted it to do earlier in the year there, and now it's flagging again with the 200-day up here at 84. I think in my 2016 note I said it can get up to here, and it's on its way. I just didn't do it to start the year because the market got hit first. But overall, this stock's been battered and bruised, and I just figured, maybe there's a good retracement type move this year that could take it closer to 90 to 100, and it seems like it's acting, better for now. So, in closing, oh, you know what? I didn't go over social. Let's go over, Facebook. I had put in this little shooting star top here. Oops, sorry. Let me just get it closer. And since then, it's giving you trades. At least you could say it's giving you trades. You had the big gap up after earnings that was fast and furious until you had your doji red dog reversal here, and then once it traded below that, that was your sell signal. Then it couldn't hold the prior high here. Okay, so that gave you that no commitment to it, so a breakout failure. And now it's kind of holding the line where went below this 103.80, came back above, and I don't know, maybe it tries to get above this 108.25. I don't know if it'll have enough power today, but overall, some trades there. This is your 1-2 day move in a row. Maybe that happens again today if the market tries to go. But overall, you see the relative strength happen. Sometimes futures go down, it doesn't go down, gives you some clues it's going to go up, and vice versa. So this is something that I gravitate towards, a lot of the time. And right now it looks pretty decent. LinkedIn, not much to say here. It's a friggin' very, 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 did I say very? Yeah, I said very, very broken name, but it seems like it might want to work its way up to the resistance gap pivot here. It's come off the lows. Just don't do too much. You have to have a thesis for LinkedIn. Then you have Twitter that has been decent since the washout lows below 15. Just as they upgraded it the other day, it had its first potent pull-in. This thing has been absolutely annihilated. Okay, below every moving average, very broken, but it has reclaimed the 8 and 21 day. So if you look at things on a micro level, you'll see that it did wash out after earnings. You had a little green bar potent here, and now it's trying to maybe go sideways again for what could be an additional move if it ever takes back the 50-day. This was your first move, and now you're seeing if there's any commitment to it. If you're long it, now I would put your stop in at 17.11, and then maybe over time it takes this out and see something a little bit closer to 22. But this was your oversold move, and now it has to do a lot of work here before you get another. And that is today's morning call. I think, again, the theme that I've been talking about lately is the tactical bull versus the intermediate bear. And how long will the tactical bull last before the intermediate bear, grows some claws again? If you have a threshold for pain, there are guys who are saying, I don't care what happens. At some point, we break those 18-12 lows. I'm just going to keep getting short, and I'll be right, whether it's May, June, July, August. Okay, great. You have that kind of threshold. But if you trade monthly for P&L and daily, you got to really know what's going on a more granular level. And so this way you can make cash flow and trade the ranges and put together months to pay your bills and just know in the back of your mind what's going on more intermediate, so when you get to levels, you're not potentially chasing and blind. And if you have long-term accounts, you could maneuver them a bit differently. But this morning call is really based for the active professional trader that wants levels, wants to know what the market's thinking about, where the action is, and try and create some alpha for yourself, to pay your bills and have a career. And if it's helping you, awesome. I'll see you today at the recap. Have a great day trading.